Sushant, let's talk about how really the market, especially the broader end of the market, the large caps are shaping up. They are stuck largely in a range, but the SMIDs are really the outperformers, and perhaps that could be attributed to the fact that the earnings growth has been better, and therefore the outperformance or the rally that we're seeing in the SMIDs. But SMIDs also were trading at a premium valuation despite the correction that we saw. So do you see more legs to this rally as far as the small and mid caps are concerned? And clearly this is a stock pickers market. So within that, within the small and the mid caps, what are the pockets of value that you see?
Too long a question, but I'll try and answer all of them. Definitely mid and small cap rally has been much better than large caps, but then that how the fall was also in the first quarter of this calendar year. So I think we saw January, February deep corrections in mid and small caps. Primarily large caps were less, I would say, in the correction mode, and that's why the reverse has been on the similar lines. And once something drops, then a significant uptick. Still, I would say that as of about a week back, almost 73% stocks were still lower than where they were in September when the Nifty peaked out last time. So between this going down and coming up, most of the stocks are still negative as such. And if you look at that phase, January, February, almost 90% of stocks were having negative returns, while March, April, May, 90% stocks were up as well. But the sum total was that over this period, 73% stocks were still down. If you look at the valuations currently, Nifty, if you look at the current expectations are now almost around high single digit growth compared to almost mid-teens sort of growth till about a year back for FY26. So expectations of the market from large caps have significantly come down, almost by 25-30% growth has come down. And that will result into market looking not that cheap as they were, I would say, from a large cap perspective in September when markets peaked out. From there, the markets have slightly become expensive, and it's more because of the dip in the growth outlook for Nifty. If you look at mid caps, the growth rates are still very appealing, although the small cap growth rates have also come down compared to a year back, how we are thinking about FY26. So from here on, definitely it's a stock pickers market. We have seen a big bull rally for the last 4 years. Primarily because of huge earning growth across sectors, across market cap segments, but that is narrowing down. The sales growth, if you look at on a quarterly basis, is only dipping for the last 10-11 quarters, and similarly EBITDA and PAT growth as well. Having said that, there are a few pockets where the sales growth is coming back as well as earning growth is coming back, and those are the pockets where investors should focus on. The other big trend, I would say, from the next year or so perspective will be to look at companies who have historically delivered quite well, and they are currently expected to deliver as well. So narratives will be behind and numbers will be more in focus for the next few quarters from investors' perspective.